Hey guys, and welcome to the Working Money Channel. The everlasting mystery. After 3 years of investigation, the SEC files a lawsuit against Ripple and declares all sales of XRP from Ripple illegal. This tweeted out by Mr. Hubert here on Twitter. He continues by saying, but unlike usual, the SEC does not even try to stop Ripple's further sales. On the contrary, Ripple sells more XRP than ever before. Things that don't make sense, really. I gotta admit, when looking at this and thinking about it, it really just doesn't make any sense. Here are Ripple's monthly sales of XRP. The SEC filed a lawsuit for XRP sales, but doesn't even try to stop it and get an injunction in and around here, okay? So we've got the chart here, and we can see some figures. We can see it going up and going down. And the trend, I'm assuming this is just a trend line kind of showing the direction of sales and where they were going. Now, they were sued here, but as you guys can see, the sales increased in the coming months after the SEC announced the lawsuit in December of 2020. So what is going on here? Mac Attack XRP posting this. SEC scared to disclose Hinman documents. Ripple is on the winning track. And in this morning's video, I did talk a little bit about this most recent article, this most recent update from the Ripple SEC case. We have recently seen a pump, a bit of a spike for XRP, and as of the time of this recording, we are continuing to see that price momentum move upward. Right now, XRP is trading at about 36.6, 36.7, give or take. We are continuing on the micro time frame to see what is looking like higher lows, and hopefully we can maintain that. Hopefully not going beyond this low down here, at least on the micro time frame. That could give us a little bit of optimism for XRP price, at least in the near term. And so I talked a little bit about this. I'm not going to go over the point that I talked about in this morning's video. If you guys want to watch this morning's video, I'll link it up here in the top right hand corner. Both the SEC and Ripple were due to file the redactions of all documents, though, relating to the summary judgment a couple of days ago. And so to briefly reiterate, the SEC still doesn't want to release those Hinman documents. They've been trying tooth and nail now and have succeeded thus far. And they're continuing to hammer that point home. We do not want to release these documents. Here's what they maintain. The SEC respectfully maintains that the Hinman speech documents are protected by privilege. If these documents were to become part of the public record, the SEC would be foreclosed from making any such argument in the future, on appeal in this litigation or in other litigation, which would be highly prejudicial to the SEC. So there's likely lots of damning information in those documents that could not just ruin the case for the SEC against Ripple. But moving forward, if they want to continue to regulate cryptocurrency with an iron fist, it would definitely lessen their leverage as well. Ripple community attorney explains the SEC's position. So here's a comment from Bill Morgan. He explained the meaning of the statement. According to him, the SEC does not think District Judge Annalisa Torres has the authority to release the document to the public, as they threaten to appeal the summary judgment decision. So that's Bill's perspective. As captured in the filing, SEC claims that it did not waive the privilege against the public as it handed the email to Ripple as ordered. Morgan also mentioned that he is not sure how the SEC can come up with this argument, since the court has already determined that they are not privileged. So some unusual things going on here, and I'll link this in the description if you guys want to read this. Bill was also commenting on this thread I noticed on Twitter from Jesse Hines. Now, let me read you guys a little bit of this. Let's talk about what the SEC means when it claims that fundraising efforts through blockchain are generally a security. So going through this is a really easy way to kind of understand their position vis-a-vis Ripple. Let's get down to the basics first. He says fundraising alone is not a security. Pre-selling alone is not a security. Using funds to pay for your operating expenses alone is not a security. People expecting or hoping to make a profit alone is not a security. So all of those things independently, if a company were to do that, that does not necessarily mean that something is a security. But when you add up the sum in one pot plus some other things, he goes on to say here, they can become a security. The question of how that happens is complex. Here is how the SEC sees it. They may be right and they may be wrong. The courts will decide. The SEC says that if you are pre-selling something, even if it has current utility, with the promises that there will be more utility, and it is you who is building that utility, and it is reasonable to expect that you are selling to pay for the cost to build that utility, and the person who buys it from you has a reasonable expectation that when that added utility comes, what they bought from you will have more value. What you have is in fact an investment contract, aka a security. This viewpoint alone is reasonable. as this really is just taking investment without actually providing the purchasers any guarantees or protections that are generally afforded to investors. This needs to be protected. But this issue is the SEC has taken this reasonable belief and pushed it to a whole new level of regulation by enforcement in some, quite frankly, unreasonable ways. Anyway, hope that was helpful, as I see a lot of confusion in the space. So I know this may be a little remedial for some of you guys, but to sum it up, I think that is a very clear description of what the SEC is trying to do, not just with the Ripple case, but with many other cryptocurrencies. And so this is why the Ripple SEC case is going to play a very important role in this. Bill responding to this, I really enjoyed this thread and parked it for a few weeks as I was busy with work and decided to revisit it today. I think you really clarified how the SEC looks at crypto and why having utility does not make a crypto not a security, but how the creating of utility is viewed by the SEC as a reasonable effort in the Howie framework. When one reflects deeply on the Ripple case, it shows why the Howie test is not suited for dealing with crypto. For example, Ripple did not give XRP utility. It is just developing a business that leverages XRPs and the XRPL's existing from its inception utility and functional attributes such as decentralized exchange. Many entities, including one that filled an amicus brief, are using the XRPL and XRP for different use cases, leveraging the same utility. Whose common enterprise when makes XRP a security or its sales part of an investment contract? Then, when you get to the expectation of profit, do I, as a buyer, expect price to increase because of what Ripple does with its business use, or because of what hundreds of other projects are doing on the XRPL? And this is the big thing, right? For us XRP holders, I mean, sure, Ripple is one of the big, creators and one of the big utility providers. However, they are not the only one, and we're not only relying on Ripple for that XRP demand. There are so many other companies. I mean, one that just comes to mind right now, XRPL Labs, and the Spend the Bits wallet, again, just another great example of how one can transfer Bitcoin, a very slow cryptocurrency. They've created an app where you can transfer Bitcoin on the XRP ledger. So, they're leveraging the power of the XRPL and XRP for other purposes. This is how the ecosystem grows, and ultimately this is where the demand will come from. So not just from Ripple. Then on top of the expectation of profits is based on an objective test. Even though there may be no evidence a single investor subjectively knew about the efforts of the entity using XRP's utility and extending its use cases. Bill continues by saying the problem leads to what I consider a somewhat perverse outcome in the SEC versus Library decision, in which the judge refers to barely a half dozen statements connected to Library, which he seemed to find were critical, but not a scintilla of evidence a single buyer of LBC heard or was motivated by, or based its decision to buy on these statements. The SEC and others in the US may extol the virtues of the Howie test and its professed flexibility. Perhaps it has been a good servant of investor protection, but the fact that you can say most cryptos are securities conditioned by the Howie framework, I assume, when other legal systems, including legal systems that are similar common law systems with similar securities frameworks to the US, have no difficulty not seeing them as securities. Bill continues down here. He does tweet another handful of tweets. I will link this in the description for you guys. And he's got a point. I mean, he certainly does have a point. The SEC not really thinking this through, or at least that is the perception they are conveying to us as the retail holder. Now, we got to question it because on the surface, I mean, it looks like, what the heck are they doing? But in the background, could there be more at play here? Is there something else that we should know about? So let me continue, guys, because I also saw this from Ashley Prosper on Twitter, XRP community. What if, okay, now hear us out here. What if this whole Ripple versus SEC drama really isn't about XRP, but it's about Ripple itself, more specifically, its stock? We've heard Brad Garlinghouse talk about the potential for an IPO. So that is something that has definitely been on our radar for the last little while. I know I've even discussed the idea of buying Ripple stock on this channel once that IPO is launched. Now, we also have, we've also heard from Brad Garlinghouse that this IPO will likely not happen if there is, in fact, an SEC lawsuit. Brad Garlinghouse, CEO of Ripple, has indicated that the firm would go public in the next 12 months. This was at Davos. Speaking at the World Economic Forum in Davos, Garlinghouse told the Wall Street Journal on Thursday that the initial public coin offering is a natural evolution for the company. And he said in the next 12 months, you'll see IPOs in the blockchain and crypto space. We're not going to be the first and we're not going to be the last, but I expect us to be on the leading side. It's a natural evolution for our company, he said. Just last month, Ripple raised a whopping $200 million in a Series C funding round, which is usually the last step before a company goes public. The Series C round valued the blockchain payments company at around $10 billion. And Ripple raised a total of $293.6 million in funding to date, according to Crunchbase. It remains to be seen how much more Ripple ends up raising in an IPO. So IPO has been, in the sights of the Ripple CEO for a while, and I'm assuming their plans are still a go, so long as this SEC lawsuit concludes favorably for them. Earlier this week, Ripple reported sales figures of XRP for the fourth quarter and saw an 80% drop. The firm sold a total of $13.08 million in XRP in quarter four, compared with $66.2 million in the previous quarter. The quarter four sales figure showed. I think that got just got cut off there. At the top of the video, I did show you, though, this chart, how we did see sales actually increase since the lawsuit was announced back in December of 2020. Now, something we should be paying attention to, something I found quite interesting, XRP was traded for 7 years, no lawsuit. But as soon as Brad Garlinghouse started talking about an IPO in January of 2020, boom, lawsuit within a year. Things that make you go, I have a feeling Ashley Prosper here is on the right track. Crypto Cannon saying this, okay, but there's a little more to the story than just an IPO. There likely is more to the story than just an IPO. What I found interesting was this. Note this trend, okay, from Johnny at Sugarcoat on Twitter. Great point. Listen to this, guys. Amazon, Tesla, Microsoft, and Apple have all been contested by the SEC before going for massive runs. Ripple is the first big private company to get attacked pre-IPO, though. It's great for future shareholders, as they probably won't have to worry about the SEC again. Now, all these companies, they were already registered by the SEC, but notice how they were all attacked before big stock rallies. Now, some of them, they're all different companies. They've all had different histories. They all, came about at different times. But if you notice and you take a look at the charts and you take a look at the trends and you take a look at why the SEC sued these companies, I think it actually paints a clearer picture. So kudos here to Johnny for noticing that. Let's take a look at some of this, guys. So Johnny talks about Amazon. So I found this article, Amazon's legal issues, SEC probe $1.5 billion in back taxes and patent suits. Amazon.com has been busy on a lot of fronts, including legal ones. In a regulatory filing today, the Seattle e-retailer notes several legal roadblocks, including the Security and Exchange Commission probe into an assessment from Texas of $269 million for uncollected sales taxes between 2005 and 2009. Now, this was from April 2011. So this case likely had been going on before that. They're, just posting an update on that. Let's take a look at Amazon, though, here from 2011. Just throw this on the weekly to get a better idea of what the chart looked like from way back then. So April 2011 would bring us in and around here. So in and around this period here, and I'm just being rough because we don't have exact dates. Likely the SEC lawsuit was filed before that article was published. So it was likely filed sometime in and around. I'm guessing here. I don't actually know. What I am noticing, though, is that Amazon was coming back up to its all-time high formed during the dot-com bubble of the late 90s, the early 2000s. Before that collapse, we started seeing it go on a run. And then as soon as it hit this top again, boom, SEC lawsuit. That article was published here. And then check it out, guys. From this point forward, Amazon continued to rally about 2,100% over the next decade or so. Johnny also mentions Microsoft in here, okay? I found this article from June of 2002. The Security Exchange Commission today brought a settlement administrative enforcement against Microsoft, ordering the company to cease and desist from committing accounting violations and other violations of federal securities laws. So another attack on a big company. Let's just bring up Microsoft here real quickly. Mr. Softy. Yeah, I took a stock course over 10 years ago, and the instructor always referred to Microsoft stock as Mr. Softy, MSFT. Now, 2002, again, an interesting time in Microsoft's history. We did see a peak during the dot-com bubble, and then 2002, if we look at June roughly, That was in and around here. So after the collapse, they likely knew Microsoft was going to be one of those companies that fared well considering its history. I mean, just take a look at stock appreciation back in the 90s. Remember, Microsoft created Windows. Of course, throughout the 2000s, Microsoft did have to compete with Apple, and it really didn't see too much growth until the early 2010s. That's when we saw another huge uptick for Microsoft, up 1,300%, almost 1,400% in the coming decade. But that wasn't before the SEC decided to sue them for accounting violations. We've also got Tesla. I mean, Elon Musk has famously said how he does not respect the SEC. Elon Musk settles SEC fraud charges, Tesla charged with, and resolves securities law charge. Again, this happened in September of 2018, and this is when the lawsuit was finally resolved. Let's just bring up Tesla here for a second. In September of 2018, we were in and around here. Where are we here? September 2018, in and around here. I think you guys can see that chart move after that. Tesla up about 3,400%. All to Johnny's point here, some of the big tech companies in the United States did see massive runs after SEC intervention. And then finally, guys, we have Apple. Now, I've noticed a couple of cases relating to Apple. One of them had to do with Steve Jobs' health back in 2009. As you guys know, he had cancer. So the SEC was curious as to where the future of the company was going to go because a lot of it was based on how Steve Jobs presented the company. I also saw this one, though, okay? Interesting, from April of 2007. And here's the analysis: Apple SEC case playing out in the public. Because most cases of stock options backdating by U.S. public companies have been settled out of court, and because Hinman is planning to fight her charges, the case could be one played out in open court, legal analysts say. Hinman was charged by the SEC Tuesday with violating federal securities law for her part in falsifying documents about the backdating of stock options grants to Apple executives in 2000 and in 2001. Again, I don't know how long this lawsuit went on, and this publication was just from 2007. What I do know, though, is that Apple did see a burst in price in the mid-2000s, in the early to mid-2000s, because of the iPod. The iPod was really that invention that got Apple off the ground. I mean, they were, pretty much trading sideways by and large since the early 80s. I mean, if you were an investor in Apple, you would have had to wait roughly 20 years to see a significant gain on your investment. Fast forward to 2007, which was in and around here, and that's just when that article was published. April 2007, in and around here. But if you notice, what they're contesting is stock option grants to Apple executives in 2000 and 2001. So clearly, they were talking about this area in and around here. The publication of that article was in and around here, so the lawsuit likely happened in this, anywhere between here in this zone. And as you guys can see, from 2003 to its height, Apple stock has gone up 76,000%. And I think it's even split a few times since then too. All things that make you go, So, is Ripple the first big private company to get attacked pre-IPO by the SEC? Is it a pattern that we're seeing where the SEC knows they've got something good? They know Ripple's IPO will likely go on a run, and maybe they've learned from previous mistakes. Maybe in their minds, they're thinking, let's nail Ripple before they launch the IPO, before a run begins. It doesn't really make sense. Ripple continues to sell XRP, yet we have all the US exchanges banning it to be traded by retail. Yeah, seems a little fishy to me, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.